Hello and welcome to Startup Street. I'm Arundhati Ramnan and joining me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup space. The Lok Sabha has passed amendments to central integrated GST laws to levy 28% tax on the full face value of bets in e-gaming, casinos and horse racing. States will now get the amendments passed in the state GST laws in their respective assemblies.
Hike that owns the Rush gaming universe has laid off about 55 people, more than one-fifth of its total workforce, in a bid to survive GST hike on online gaming. In a statement, Kavan Bharti Mittal, the founder of Hike, said, "Business is in the best shape ever, but this 400% increase in GST is a bazooka pointed at us." Earlier this week, MPL laid off 350 employees, citing similar reasons.
South Korean gaming company and BGMI maker Krafton to invest $150 million in Indian startups over the next 2 to 3 years. Krafton plans to allocate at least 1/3 of the corpus towards existing, another 1/3 towards deep tech companies, and the remaining capital will go towards other new startups.
Google will not remove applications of startups that have challenged its in-app billing policy from its Play Store until the 18th of August. The tech giant informed the Madras High Court of this as it heard the startups' petitions challenging an order dismissing their pleas.
Linda Yaccarino, the first CEO of Twitter under Elon Musk, says she has complete autonomy to run the business. Also adds that she is partnering Musk to transform Twitter into X, which aims to be an everything app that allows payment processing, video calls, among other things. That's a CNBC exclusive.
Amazon is shelving its several private clothing brands as the e-commerce giant tries to cut costs and address antitrust scrutiny, Reuters has reported. The company decided to eliminate 27 of its 30 in-house label clothing brands. Well, those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing, wealth tech startup Stable Money has raised $5 million in a seed round led by Matrix Partners India and Lightspeed, with participation from Titan Capital, Marshot Ventures and other prominent angel investors. The funds are going to be deployed to bolster senior leadership hiring, forge financial partnerships, build technology and develop a user-friendly mobile app for diversified fixed return investment opportunities. Joining me now to talk about this funding and the road ahead is the company's co-founder, Saurabh Jain. Saurabh, welcome to Startup Street. Thank you for your time here. If you could start by telling us about Stable Money, a very new company that you've now started, what it plans to do differently from the plenty of investment platforms that are already in the market, both traditional and new age.
All right. Hey, thank you so much, Ritu, for having me. I'm super excited to be on the show. On Stable Money, I think the one reason that we are different is that 30 to 40% of any investor's investment falls into a fixed income category. And that is one part which is really untouched by any investment platform. There are platforms for stocks, there are platforms for mutual funds, but there is no really platform which is very seamless like we plan to build. So I think we'll be catering to that 30-40% of the investment amount of a particular retail investor. I think that's a unique proposition.
Well, it is a large opportunity and a large pie that you hope to capture. But, you know, this $5 million that you've raised, there's plenty of, you've written down a list of how you plan to use it. But give us specifics at what kind of hiring you're looking at. How many more partnerships will you target in the near term?
Sure. So I think hiring-wise, there are 4 key buckets in which we are looking at hiring. One key bucket is on the product side, that we want to build a world-class product for the investors who are used to doing using products like Swiggy, Zomato, Zerodha, Grow kind of product, right? So that's one part. Other part is engineering. We are very particular about the data security and safety of the retail investors' data. So I think that is where we are putting the second leadership. The third part is focused on the investment products. So we are building products which are unique to the retail investor, which was initially only open for the top 1% of India's wealthy investors. And fourth part is on the partnership side. So we are looking at around 10 financial institutes to partner by this year end, and this number will go up to 25 partnerships by the next year end. So these are the 4 key pillars on which we are looking at hiring.
So those 25 bank partnerships by the end of next year, what would that lead to in terms of expanding your customer base, and where is it currently? To what extent are you looking to grow it?
So Ritu, we are currently only open to early beta access users. We are launching the product in 3 to 4 weeks. We are making some more improvements as we learn from the users on what needs to be improved. But we soon plan, like our goal is in next 9 to 12 months, we want to be India's largest FD booking platform online. So that's the goal that we have right now.
Okay, India's largest FD booking platform in 9 to 12 months is an ambitious target. What would that mean in terms of your revenue then? And what about profitability?
So I think we are over long term, our goal is 5 to 7 years. We want India's retail investor to do their fixed income investment onto stable money, their first fixed income investment onto the stable money. And the revenues will start coming few years down the line. Currently, the revenues come from the partnerships that we have. So that's a very small pie. Our current focus for the next couple of years is to grow the customer base for stable money and reach a point where we keep adding more financial products to the investors, start manufacturing some of these products, and then the revenues will start flowing. So I think for the next couple of years, we are not looking at the revenues as we are looking at growth.
So Saurabh, that is the final question. I mean, what more products are you talking about? Are you looking to be a financial conglomerate of sorts on your platform? Will you at some point look at offering broking, insurance? I mean, what kind of services are you talking about?
Broking insurance, we haven't thought, Ritu, to be very honest, but we have a certain products in pipeline. After that, we are launching debt mutual funds like liquid fund, arbitrage funds, debt mutual funds onto the platform. We are also in process of getting the required licenses to get into the bonds market. So we will be offering corporate bond, government bonds, sovereign gold bond kind of products. So that's the product pipeline for us for the next 6 to 9 months. But yeah, I think as we keep adding more and more customer base onto the platform, I think we'll be open to expand it beyond the fixed income products as well. But as of now, that's our plan.
Saurabh, it's been a pleasure speaking with you, and we hope to connect with you in the future again, and wish you all the very best.
Thank you, Ritu. Thank you so much.
Fintech unicorn Mobikwik recorded profitable growth in the first quarter of the current financial year with an adjusted EBITDA of over 13 crore rupees. This is a 181% increase year over year. This is the second consecutive quarter where the startup has reported positive EBITDA. Joining us now to decode the numbers, growth drivers and future targets is Upasana Thakur, the co-founder of Mobikwik. Upasana, thank you so much for joining us on Startup Street. Like I said, this is the second consecutive quarter where you've seen profitable growth. Where is the growth coming from, and where do you expect to close this year?
So firstly, thanks for having me here today. And, I wanted to tell you that not only have we clocked profitable EBITDA quarters, but this quarter, Q1 of this financial year, we are also, profitable at the PAT level. And I believe we are the first Indian fintech company to achieve, this level of profitability. So I do believe that it's a huge milestone for us.
Absolutely.
But of course, we are working towards, continuing this, trend of profitable quarters. And we expect that this year we'll do maybe 2x in revenue and achieve 1,100 crores of revenue and maybe 40 to 50 crores of profit on that for the full financial year as well.
All right. So, like you said, congratulations on achieving this. But what's the IPO plan, Upasana? Is it still on hold? When do you plan to go public? You said once you get 2 quarters of profitability or 4 quarters, you look at going public. So what's the plan now?
No, we are definitely, very keenly looking at the capital markets. The capital markets globally, as you know, last year and the year prior, have been down because of macro factors. But now things are picking up. And, we have seen few IPOs come through, although not of tech companies. The Sensex is going up. Some companies are doing well in the tech sector and their pricing is going up. So I think these are all positive indicators. And we are also keenly looking at the market. And yeah, you're right. I mean, while the market comes back to, even higher and stabler grounds, we are using that time to beef up the profitability of the company. And so that when we come back to the market, it should be with proven financials. So that's what we are up to. And, we are keenly watching the markets. And at the right time, we will definitely give it a shot.
All right. At the right time, is that 1 year from now, 18 months from now? Any timeline on that we can get?
Boss, that I don't know. I mean, it could be, like I said, we are avidly watching the markets.
All right.
And it could be anywhere in this time frame.
Okay, anywhere in that time frame. Why don't you talk to us about what led the growth for you? You've also said that your focus will now be to increase your presence in tier 3 and beyond cities. So talk to us about this opportunity. What's your presence there currently, and how much do you plan to increase this by in this fiscal?
So absolutely, I do want to talk about, what is bringing around this profitability. So I think Mobikwik, as you know, has been started out as a digital payments business, and that is our old foundational business, but it continues to be the large source of user acquisition, merchant acquisition, and engagement for us. And of course, we earn our bread and butter revenue from payments as well.
Correct.
And what has happened in the last 4-5 years is that we have now such a large pool of users. We have about 140 million users and about 4 million merchants. And, we are looking at how the user is transacting every day and how the merchant is collecting payments every day. And that data has helped us understand their profile much better, based on which we are able to bring to them several financial products, be it credit products, be it overdraft capital products, be it saving and investment products. And I think that is where we are seeing a lot of user engagement coming, where we are able to give them these financial products that are not available to them otherwise from their own financial institution.
Right.
So we are seeing a lot of growth and profitability from these higher margin products that we have been distributing.
Like you just mentioned, you also have a digital credits vertical. What's the demand that you're seeing on that front? What will drive growth for you more importantly in FY24? Will it be a core payments business, or are you looking at these new verticals, digital, credit? Any new offerings in the pipeline?
No, absolutely. See, we look at all financial products under the financial services umbrella. And so far, we have built out 2-3 products in the digital credit sphere for the user. One is a 15-day, 30-day, 5 to 25,000 rupee credit product. And the other one is a 12-month, 18-month or 24-month EMI product, where the ticket sizes are anywhere from 25,000-30,000 going up to even 2 lakh. So these are the key offerings on the consumer side. Now we are just getting started with similar credit offerings for our small merchants, the retailers as well. We've also launched investment products, saving products. We may launch insurance products as well. The idea is really, you have a user in a small town in India who has a smartphone, has a bank account, but doesn't have any other financial product. Now, can we fill in that gap and bring to them the array of financial products that they may need,
right,
in their business, in their life?
All right, so that's where we're going to see some growth coming in for you. Upasana, we're completely out of time, but thank you so much for joining us on the show. And again, congratulations in achieving this.
Well, Mobikwik, one of the fintech companies recently turning profitable. On that note, we have to take a short break, but up next, Sellerapp, one of the initial players in the ONDC platform, has onboarded more than 1,500 sellers on the network. A special conversation with the company's co-founder when we return.
Welcome back. You're still with us on Startup Street. Now, Sellerapp, one of the initial players on ONDC, has managed to onboard over 1,500 sellers on the open network, including leading CPG brands like Red Bull and Mother Dairy. In a chat with Aishwarya Anand, co-founder Brij Purohit said that self-help groups, women sellers and Mandeshis have benefited the most from ONDC. Here's a slice of that conversation.
Look, so when we started in 2017, or I would say rather 2016, right? So that phase I had a first-hand experience of working as a seller. There was no availability of the data, and the business decisions which I was making was mostly based on the guts, right? And this was when I interacted with the other sellers in this ecosystem, tried to understand their mindset. This was a very common problem. And this resonated to the people in the rest of the world. And we started as a SaaS subscription business, where what you have to do, you have to connect your marketplaces accounts. We ingest the data. Based on the data, we generate the insights and we give you the output saying that, okay, these are the 10 actions you have to take and perform, right? And these actions are based on the different buckets of your optimization, let's say, business monitoring, you say, assortment gap, you say, pricing you find.
See, you were one of the initial participants on ONDC, right? And Red Bull recently partnered with you to come on board the open network. So I want to understand from you, how many sellers till now have you helped on board the ONDC platform, and how has their businesses been? How much has it grown for these sellers since the time they joined ONDC?
We have a three type of sellers. The one who are already marketplace sellers, the one who are brand like Red Bull kind of thing, and then there are the self-help group, the women organization, these Mandeshi type of organizations. Those are the sellers who are on network. So the major impact what we have seen and what ONDC stand for is helping these undigitized people to get the flavor of what the digitization can do to them. So if you look at the sellers base which we have from Kanchipuram, right, the Kanchipuram weavers, sari weavers, so they are getting visibility pan-India. And the number of orders which they are clocking, probably these were the sales which they were doing probably in a month. So 3 lakh of sales per day is a huge number for these people.
Now, you've also recently partnered with Google Cloud to bring enterprises onto the ONDC platform, right? So tell me, what kind of innovative solutions are you providing to these sellers through your platform? And I also wanted to understand from you, how are you using AI to transform the experience for the sellers on the network?
So when we say these self-help group or the women organization, these are not digitally savvy sellers, right? We need a lot of hand-holding. That's where the innovative solution which Google is bringing with Gen AI, Vertex AI. So somebody who is in Tamil Nadu can say that, hey, I want to list a sari, and in his local language, these are my USP, this is my price, this is the image, and AI will create the listings for them.
Correct.
That's where we see the power of Google tech, making them enabled using Gen AI, Vertex AI kinds of technology. And anyways, that partnership is not just related to this Gen AI or Vertex AI. There is also, we have done a partnership to enable the brands who are already on Google infrastructure to get online.
Give us a sense of where do you see the e-commerce industry in India going, and considering what the market looks like, what is the percentage of sellers in the e-commerce space, correct? And I also wanted to understand from you that what are some of the challenges in finding a way to get these sellers of different sophistications level to, become part of the network?
What I see is 7-8% of India is still being penetrated so far in terms of seller ecosystem. And when you say the challenges, I see two major things, right? First is being digitally not savvy enough, or being not exposed to the digitally enough. So that's being one region where we need a hand-holding and the training required. Second, being in India, we don't see, from a seller perspective, we don't see things happening at a scale. That's where the margins are lesser.
Yeah.
And when your margin are lesser, there is very less chance that you can get into the marketplaces traditionally, because the marketplace commissions is anywhere between 12 to 12%, 12 to 18%. Now I have margin of 10 to 12%, I cannot operate on this profitably, right? And no business, at least medium and small size businesses in India, want to do at a loss.
How has the business been doing? What does your FY23 numbers look like? And how far are you away from profitability?
So at an operational level, we are positive. PAT positive, you say no. PAT still has to be worked on, but we are not like draining a lot.
Okay.
Right? And there is no lot of cash burn. And there are reasons for us to lose money in certain cases. Let's say ONDC not being the one who is generating revenue at this point of time. So we are looking that as our investment, right? Being our SaaS subscription business, doing very well profitably. So these are the two ways we look at the business.
Well, from e-commerce to cloud kitchens, Rebel Foods, which started off as popular QSR outlet Fasos, is now betting big on its food court model, with each show both online and offline. The company sells brands like Behro's Biryani, Oven Story and Lunchbox, and is also on the path to profitability at a company level within a year's time. Shilpa Rani Peta caught up with Sagar Kochar, who is the co-founder of the company, to talk more about that and why the company decided to pivot back to its offline model.
So the answer is very straightforward, right? I mean, over a period of time, at every junction of ours, we kept on realizing as to what is the next big problem that is to be solved, and opportunity, and with the power of our stack or the OS that we had kept on building over years, we realized that we were in a much better state to solve for those problems. That's exactly the reason now we are stepping back to offline, because with the power of OS and with the platform play of each show, we feel that even in the offline, when you look at, there are a lot of unsolved consumer problems. It has a larger purpose to solve for these broken experiences that exist in the online and the offline world.
Right. So, I think the first one that you had launched was in Pune,
Correct,
right? So, currently, how many do you have across cities, and what is the plan on the expansion there?
So this year was largely about figuring out what are the different formats that we can come up with. So, like for example, within the offline formats, also we launched an express format, which exists on an expressway, which is largely a takeaway kind of format. We have launched a corporate format, and then we have launched this flagship smart food court kind of format, again to understand and find more such nuances or I would say the opportunities that exist, right? So while we have done about 4 of them, and we'll be doing about few more of them this year, but with the kind of traction that we are seeing for these food courts and the kind of product market fit that we have realized, which is again all evident in numbers, right? I mean, the kind of repeat rates and the kind of merge ordering that is happening between restaurants gives us a lot of confidence that this is the model that we will be scaling up in a couple of years.
Right.
So we are looking at close to scaling up to about hundreds of similar different formats over the next 2 years. But first getting the formats right in this very year.
So, from the 45 plus brands that you have currently, so I want to understand which brands of yours have been your biggest growth drivers so far, and any particular focus on any of the brands going forward also to sort of drive the growth?
The older mature brands are obviously contributing to the biggest in the pie, like the brands like Fasos, Behro's Biryani, Oven Story Pizza, Lunchbox as a brand has grown tremendously well. And then there are new brands like say the Good Bowl, the Frangi Bake, Sweet Truth, and these are brands which are also seeing great growth rates and also slowly grabbing more pie in the share. And then we also invested in a few of these brands where we saw great PM fit, brands like Smooth Chocolates, Zomos. These are again, they are like the category leading brands.
How are we looking at growth when it comes to overall Rebel in terms of revenue growth, in terms of your turnover? How has that been for the past fiscal, if you can give me a sense? And what's your path now to profitability? I think at an operational level, I did read somewhere that you are operationally profitable, but is that going to change now because your costs are going to increase? Right,
with the kind of bouquet of offerings that we have a lot of S-curves, right, to say that, and that's what is also evident in our numbers, wherein we are by a good margin actually growing much ahead of than the industry growth rate. So on the revenue piece, we are pretty secured. I mean, it's largely, the puzzle is largely solved as we keep on launching a lot of these brands, scaling them up, and doing a lot of innovations across the portfolio of our current brands. In terms of profitability, fundamentally we have been very clear. We would right from the inception of our existence, which is we would never buy growth.
It is the end of the week, and it's time to take stock of all the deals from the startup world. According to Venture Intelligence, this week saw a total of 9 deals worth $92 million. Let's take a look at some of the notable ones. Debt resolution tech company Credgenics bagged $50 million from Westbridge, while skilling platform Disperse raised $30 million from Lumos Capital and 3601 Asset. Meanwhile, wealth tech startup Stable Money got $5 million from Matrix Partners, Lightspeed Ventures, and others.
The healthcare brand WhatsUp Wellness got $1.6 billion from Unilever Ventures and others, while brand sourcing platform Beatso raised $1.5 million from Peer Capital and more. According to Venture Intelligence, in 2023 till now, the space has seen 357 deals worth $4.3 billion.
And with that, it is a wrap on another edition of Startup Street. More news and updates coming up on the other side. Stay tuned.